Institutional investors, family offices, and DBS Bank's customers have historically been the only groups permitted to trade cryptocurrencies on the DDEX, but not anymore, because Southeast Asia's largest bank, DBS, will now offer accredited investors in the DBS Treasures sector access to its self-directed Bitcoin trading functionality. In this video, we'll talk about why it's such a big deal in the era of cryptocurrency. Let's get right into it. First up, let's look at how the DBS Digibank actually works. So, using the DBS Digibank, anyone can access independent cryptocurrency trading. Well, not just anybody though. You do need to meet certain criteria, but don't worry, according to an estimate, it's around 100,000 people. Maybe we should just be a little bummed out because this opportunity might be more accessible to wealthy people. So anyway, DBS disclosed that its digital asset exchange's trading volume surged, and that makes sense because it's a multinational financial and banking company. It recently announced that it had begun offering independent cryptocurrency trading through DBS Digibank, which is great news for everybody looking to invest in cryptocurrency. After all, the future is crypto. They also said in the announcement that the eligible candidates will now have the flexibility to trade cryptocurrencies on the DBS digital exchange utilizing DBS Digibank. So much more convenient, right? If we dive into the specifics, the trade of 4 cryptocurrencies, including XRP, Bitcoin, Ether, and Bitcoin Cash, is now supported through the DBS Digital Asset Exchange. Until now, only the institutional and corporate investors, family offices, clients of self-owned wealth overseers were allowed to trade cryptocurrency on the platform, but not anymore. Coming up, a look into what the announcement said. For starters, it's estimated that 100,000 Singaporean investors meet the requirement and are able to opt for the services being offered by DBS's digital assets environment. Sam S. Lim, an officer at DBS's Consumer Banking and Wealth Management, said that easier access to DDEX is another step in their efforts to give experienced investors who are just starting to explore the world of cryptocurrencies a perfect experience. So now the investors who value the long-term potential of digital assets are turning to trusted and managed exchanges to access the market. Also, the bank just entered the METAVERSE by collaborating with Sandbox. In March, Piyush Gupta, the chief executive officer of the DBS Bank, said that he doesn't think that cryptocurrencies will replace actual money, noting that it may be an alternative to gold or will at least have the same worth. Next up, why should you even consider investing in cryptocurrency? We're sure that this is one of the questions that must be popping up for you. The answer is Bitcoin and other cryptocurrencies underlying blockchain technology have been praised for having the potential to revolutionize a wide range of sectors, from banking and healthcare to supply chains and transportation. And we aren't saying this lightly. The distributed ledgers enable new sorts of economic activity that was previously pretty impossible. How do they do it? By eliminating middlemen from computer networks. For those who believe digital currencies may have a promising future, and trust us, they do, making an investment seems like a logical step. Investment in cryptocurrencies offers profitable opportunities to make money by putting technology to good use. We mean, what's the point of tech if we ain't utilizing it the best way we can? Secondly, the need for a trustworthy, long-term store of values, another common reason why you should be investing in cryptocurrencies. Most cryptocurrencies, unlike fiat money, have a finite supply that's only limited by mathematical procedures, and this prevents any political entity or governmental organization from having its value diminished by inflation. No inflation? Is this utopia? It could be. Thirdly, no government agency can tax or confiscate the tokens without the owner's consent due to the cryptographic structure of cryptocurrencies. Because of this, cryptocurrencies appeal to those concerned about bank failures, hyperinflation, and/or other catastrophe scenarios. Due to its censorship-resistant and deflationary features, Bitcoin in particular has gained attention and is referred to by its supporters as digital gold. Next up is the answer to your question, where to from here? Even though the introduction of this new feature has been eagerly anticipated, DBS recently stated that it's also working on ancillary parts of the service, with a digital onboarding procedure which is scheduled to go live in 2023. The demand for cryptocurrencies is still strong, and more investors are being attracted to them like a moth to the flame. Wait, we aren't just saying that, we have stats to back it up. So, according to Capgemini's World Wealth Report of 2022, 79% of high net worth people worldwide and 91% of those under 40 have invested investments in digital assets. Coming up, potential risks because you need to know what you're signing up for. Even though a lot of proponents think that cryptocurrencies may one day be used in everyday transactions, speculations have crawled their way into the cryptocurrency market too. Research on blockchain activity shows that exchange rates continue to be one of the most common ways that cryptocurrencies are used, and they account for a very higher volume of economic activity than simple trades and purchases. Cryptocurrency skeptics have expressed concern about a potential bubble, and yes, it includes people like Warren Buffett, Bill Gates, and Jamie Dimon. But then again, it's not limited to cryptocurrency. This hysteria of market bubbles has also affected other assets, including cannabis stocks, technology companies, precious metals, and even residences, and had disastrous results for many investors. Lastly, a word of advice for the new investors. A lot of investors are still opting for crypto trading, despite the fact that there are reasons to be suspicious of digital currencies. The blockchain industry is frequently referred to as something that's undergoing a transformation and will revolutionize the world pretty much in the same manner that the internet did in the 1990s. But yet, advocates of digital currencies should make an effort to fully comprehend the risks associated with cryptocurrencies before diving into them headfirst. They should not only take the time to understand and recognize the common traps new investors may fall into, but also master the intricate security processes and thoroughly investigate their new investments. And in other news, first up, Kenyan Central Bank calls converting the nation's reserve to Bitcoin craziness. The governor of the Central Bank of Kenya, Patrick Njoroge, has called the concept of investing the nation's reserves in Bitcoin craziness. Njoroge said that if he were to agree to convert Kenya's reserves to Bitcoin, he should be imprisoned and his detention cell's keys should be destroyed. That's a little dramatic, but okay. Recently, while talking to recently elected members of Kenya's legislature, Njoroge said that the CBK has issued comments and warnings under Njoroge's leadership, cautioning Kenyan citizens against investing or trading in cryptocurrency. For instance, in June 2022, Njoroge and the deputy governor of the Central Bank of Nigeria listed the volatility of cryptocurrencies as one of the major reasons why they couldn't be used as a common payment method. Njoroge emphasized he too is under pressure as he urged lawmakers not to listen to those promoting Bitcoin and other cryptocurrencies. He said he's aware that some of these people who are pushing for these things are putting a lot of pressure on people, and they're only doing it because it's beneficial to them. Njoroge, however, claimed that he'd have to be insane to accept the request of converting the state reserves to Bitcoin. Up next, DBS and UOB removed the fixed-rate home loans amid ongoing review. DBS has taken fixed-rate home loans off of its website. In response to inquiries, UOB stated that it's assessing its fixed-rate packages in light of the entire inflation situation and will be discontinuing its current 2- and 3-year packages. In line with similarly significant hikes in June and July, the U.S. Federal Reserve declared a 75 basis point increase in its benchmark federal funds rate a few days ago. This year, as central banks around the world scramble to raise interest rates in an effort to control inflation, lenders have begun changing the rates that they charge for house loans. Larger adjustments have been made to fixed-rate packages. Due to the rising cost of financing early in the year, some overseas banks suspended fixed-rate contracts altogether. The lending margins have remained intact since its last review in June, and the bank continues to offer floating-rate home loans that are indexed to either the benchmark Singapore overnight rate average or the bank's 6-month average fixed deposit rate. Similarly, UOB's still providing a floating-rate package with a 2-year lock-in that's tied to the 3 months compounded SORA in addition to a 1% margin. There's also a current deal that allows new customers to take advantage of the floating rate package for the first 2 years at a lower margin of 0.7%. However, OCBC's mortgage offers appeared to be unaffected, at least for now. Lastly, DBS collabs with Finlink, outs plug-and-play APIs for corporate treasurers. In order to implement embedded real-time payments and cash management, Finlink has teamed up with DBS. Since Finlink transforms corporate finance and treasury offices by integrating worldwide banking APIs, utilizing DBS's comprehensive API suite Rapid will give the corporations an easier and more effective approach to digitizing their corporate treasury processes. The corporates will not only benefit from easier integration thanks to the DBS Finlink alliance, but will also eliminate the need for complicated implementation projects, making things much smoother. That's it, folks. What do you think of DBS launching its app-based self-directed cryptocurrency trading? Let us know in the comments below. Don't forget to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.